Welcome back to the part 2 of how to trade as per your age group. In this age group, we're going to talk about 30 to 50 years old traders. Now, this is the most dangerous age group in trading. I'll tell you the actual reason. Life gets very real. Responsibilities have increased. Your capital protection phase has started. What does this mean? It means that your every rupee you earn that matters a lot. You know that you cannot afford to make the same mistakes you made in your youth. You have understood and analyzed your part of your life, and you want to make it better in this age. From the previous part, you know the flaws and the errors, the mistakes a 20 to 30-year-old young trader makes. You cannot repeat that in your 30s. So let's break down the current state of life. You know, the peak responsibilities. You have to look after your kids, your parents, your lifestyle changes. You have to keep up with the society pressures, your peer pressures, your colleagues, all that. On top of that, you have to take care of your monthly expenses, your EMIs, your payments, all that have to be done timely. The truth is, the time you have for yourself is very, very little. You have a little bit more sensitivity towards capital. That means, like I told you earlier, every rupee you earn or make, it matters a lot. So knowing that you have a lot of responsibilities, what is your main desire? Your main desire is stability. It is not excitement. You want peace. You want predictable cash flow. You want to know exactly at the end of the month or end of the week how much money can you make, how much money do you have, how much money you can earn. Speaking of trading maturity, you know that you are emotionally reactive. The truth is, fear based decision making, it dominates even in your life as well as in your trading, because every little bit of the money matters so much that you think this money can be used somewhere else also. I cannot lose this money. The cash pool and the expenses, you have a larger capital than your youth days, but like I said, this capital is sensitive and fragile. Your monthly obligations are non-negotiable. You have to find a way to fulfill all your monthly expenses. Drawdowns are not just normal losses in the market, they hurt you in real life, because it is not just PNL. It is money where you could have used elsewhere in your life for your family or your kids or someone else. Now, marriage and family pressure has an additional side to it. It is not just trading losses. Like I said, you cannot speak to anyone about them. There's nobody to talk to. Over trading to recover faster, that becomes a big trap. Hiding your losses and also trading guilt, the mistakes you make. Like I said, you cannot talk to anyone. You feel that you are in a very lonely phase suddenly. So the biggest mistakes 30 to 50 years old make in your trading phase is that you trade like a young trader who has no risk in life. That is the biggest mistake. You cannot repeat the young trader's mistakes in your 30 to 50s. Fast money traps, just like the young trader, over leveraging, this time not to make big money, but to make it meaningful. You are connecting some emotional value to your profit and loss. That cannot happen. Ignoring the risks in the market by selling naked options or taking naked futures positions for higher income, that is the mistake based on emotional decision making. The truth is, the psychological damage which trading can do for you is a lot. The emotional bandwidth you require for actual deep learning and skill building is over. That is the younger days. Right now, you don't have time. You have to look after your family, work, relations, your business. And then, with that stress, you are trying to learn something with clarity. That is absolutely not possible. Mixing your money, first thing, mixing your money, investments, medical expenses, family capital, family money, some savings for your kids, all that you put into trading capital. That is why even small losses can give you heavy mental damage. So now what should you do? What is your core objective as a 30 to 50-year-old trader? First thing, you must focus on surviving in the market, then stabilizing and removing money from the market without stress. This is the keyword, without stress. Don't look for aggressive growth options. Don't look for aggressive setups. It comes with a higher risk and stress. Look for durability because you want small and regular growth to stay in the market for a long time. You need to prioritize your cash and life alignment. So separate the emergency fund, the investment capital, the trading capital. Does not matter if you have built a trading system or not. It is very important that trading capital should be the money that you can lose if you make any mistake. Now, what are the skills that you must learn? First, most important, corrective and sideways market identification, volatility crush behavior near major market events, capital rotation logic, how to spread capitals between monthly and weekly. Now, the next part is to understand which market structure you need to focus on. You are going to look for ranges monthly and weekly, especially the expiry. So, your main aim should be to figure out what is the next possible range in the market. Use that range and compare it with whatever expiry you are following, weekly or monthly. Then make your strategy like that. Market distribution patterns is very helpful for you, especially consolidation patterns available in the Elliott wave theory. Price behavior when trend changes phases to correction phase and then again back to trending phase. Try to understand why markets consolidate 80% of the time and only trend for 20% of the time. Based on this logic, that market consolidates is in a corrective phase, either price correction or time correction for 80% of the time, you are going to focus your strategies based on this 80% part. Now, what are the strategies? You know the skills you need to learn, you know the market structure you need to focus on, how to make money from your analysis. Focus on weekly and monthly income. Learn iron condor strategy. Very important. It has a defined risk. It's a non-directional strategy. Very good for weekly and monthly income. Same thing with iron condors. There's something called iron butterfly. Only near confirm sideways momentums you can apply this. It suddenly boosts your income a lot. But again, this is a selective nature, selectively based on the structure of the market. What about trends? So since you're focusing on regular income and most of the time market, 80% of the time market shows some sort of a consolidation move. When the market suddenly shifts from consolidation to trending, you can study the debit spread strategy. But since your main strategy is iron condors and iron butterfly, you have to figure out when the market shifts trend. If you want to capture that, you can leave it or you can use a debit spread which define risks. Learn the strategies, very important. Your trading style is now completely shifted. You understood your skills in the market, you understood what market structure you need to focus on, you understand the options strategies you can build using this knowledge. Now your trading style, it has become fewer trades. You're not chasing excitement. Your higher probability patterns is what you're looking for. The truth is you have to accept that boring strategies make more regular income in the market. So in this video, I wanted to summarize for a 30 to 50 years old trader, you are not chasing excitement. You need regular cash flow in your life. This is the most dangerous age for doing trading. Watch the previous part of 20 to 30 years youth traders don't repeat their mistakes, and then watch the next part where the trading style of a 50 plus age group to understand your trading style and your next phase of life. I'll see you in that video. Till then, take care and be safe.